Holy smokes, everyone. This is an emergency update. There is something going on with the banks that has never been done at this scale before. While everything seems good now, there is something going on behind the scenes and behind the curtain that many people aren't aware about. But in this video, I want to expose exactly what the banks are doing and what they're preparing for, because they definitely don't want you to know this. Okay, everybody, let's not waste any time. Let's get straight into the news, the facts, and the data. Now, what you first have to know and what you have to remember, there was something that happened in 2019, right before the stock market crash in 2020 in the repo markets. All of a sudden, out of nowhere, banks didn't want to lend to anyone and interest rates in the repo markets went haywire. There was simply not enough cash, too much demand, and this caused a liquidity crisis. And so, of course, the Federal Reserve had to step in and inject billions of dollars of emergency liquidity. But there is something very different happening today. What then happened in late 2020 and early 2021, the money market funds, they're the people that park their cash with these money market funds to get a safe return on their cash. They're not looking for big returns, they just want to preserve their capital. They were running out of places to park cash. And on the short-term US Treasury, short-term government bonds, IOUs, the yields were about to go negative. This was due to the huge amounts of money printing and quantitative easing the Federal Reserve had done, and with the Federal Reserve buying up many of these US Treasuries. Also, I'll bring up a chart here of the US government Treasury account. They're no longer issuing new short-term Treasuries, so they're draining this account instead of issuing more, so there was a shortage. And this was a big problem because there was huge amounts of demand to park short-term money, but if the yields went negative and the federal funds rate went negative, these money markets business models could have gone bust. So then what happened is the Federal Reserve stepped in again to bail out these money markets and bail out these banks through what is called the reverse repo market. Now, I know this can get a bit technical and sound a bit confusing, but what this simply is banks and money market funds are parking their cash at the Federal Reserve overnight. They give the Federal Reserve their cash, and the Federal Reserve actually lifted interest rates on this reverse repo market operation. So again, they lifted interest rates for the banks, but not for you when you deposit money. And since they started doing this, the demand for this program has absolutely skyrocketed. But now this is what's happening, everyone. Look at this. Fed repo facility use jumps to record high on the final day of 2021. More than 100 participants on Friday put a total of 1.9 trillion at the Fed's overnight reverse repurchase agreement facility, in which counterparties like money market funds can place cash with the central bank. The previous record was set on December 20th with 1.75 trillion, but Friday's 208 billion leap was the biggest one-day increase in usage since June 17th, after the central bank increased the offering yield to 0.05%. That compared to the last trading day of 2020, when a mere 15 counterparties tapped the facility for 9.6 billion. So I'll bring up a chart here, everyone. We can see the demand for this facility is going absolutely parabolic. So this is absolutely crazy, people. I've been watching this play out in the background, and today I was shocked to see that they're parking nearly $2 trillion at the Federal Reserve every single day. What that tells me is the banks are preparing for something, and they're preparing for something big. So what could they be preparing for, everyone? Well, what are we seeing in the data now, everyone? It is looking more and more likely that we're going to be entering into another recession in late 2022. And really, for many, for the poor and the middle class, they haven't made it out of the last recession in 2008. Sure, the stock market and the housing market has definitely recovered and roared, but the middle class standard of living has been declining rapidly. Also, what's going to be happening in 2022 is all these people that weren't paying their rent, weren't paying their credit bills, their personal loans, their car loans, their mortgages, well, the music's going to stop for them, and the banks are going to start demanding money. And with no more stimulus checks coming out, simply the money's not going to be there. So we're going to see a wave of more defaults and a wave of more bankruptcies in 2022. And with the stock market at such excessive valuations, it seems like they're not too confident of parking a large majority of their cash in the markets. So everyone, what this means in simple terms, although we don't know exactly what the banks are preparing for, they are preparing for something big in 2022, and we should also be doing the same. But everyone, that's just my thoughts and opinions on the situation. What do you think they're preparing for? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. I'll put up some of my other videos here. I'll see you there.